Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us today is a special guest and a good friend, Bill Murphy, the chairman of GATA. Bill, it's great to have you back on the show.
Thanks for having me on here, guys. I really appreciate it.
Gold and silver definitely looking quite a bit better than the last time we had you on, Bill. We're thinking about getting you some antidepressants after we had you on the show last time, but gold and silver
I heard you whispering in the background. I said, "Oh man, it was that bad." But I understand. You're probably right. I mean, enough's enough.
It's certainly been nice to see gold and silver move up here the first few months of 2016.
Well, if I may, there's one thing I've never seen gold. Silver's a different story still, but trade like it did in January. I mean, even in the bull markets, it never traded like that. And what I mean by that is that the gold cartel will attack, and the next day or two, it would just come right back, and often for no apparent reason. And the price, the upward momentum, it was fierce and it was consistent. And again, it was a rare time in which the gold cartel, as I call it, was really forced to backpedal, and they dug in their heels when we got up to the 1280 and kept on doing it. But that was very different, and the shares performed differently during that period of time. I mean, and we can get into that. They continue to act that way, and so there's some things that have changed. Whether this will be different this time, like I'm hoping, again, we can discuss that. We'll have to see.
Yeah, certainly something that Eric's noted on the show quite a bit here, haven't you, over the last couple of months, Eric?
Yeah, I mean, we have consistently seen a lot of new buyers and new monies coming to the sector. And what's interesting is that it's definitely a North American and European phenomenon now, too, which has not been with us for, all of these various attempted reboots of our bull cycle. And so that's what's really different this time around. And that's coming in paper buyers and physical buyers. And we've had Asia all along buying physical. And now we have a full core press. And even, I like to refer to the managed money segments of, money under management worldwide. 95% of it is pretty much conventional thinking. Those people don't read Zero Hedge. They don't read Le Metropole Cafe and Bill Murphy's Midas newsletter. I mean, this is stuff that, believe it or not, like 1/3 of the money managers in Western financial markets are just 8 years out of college or less. I mean, they haven't even experienced market trading that included a single large bear market like 2009. So most people don't really understand what's going on until things start changing, and as our economies worldwide have been rolling over, and now it's visible in the United States even, and financial markets are under pressure. People are coming back into gold in the conventional space, and silver too.
Well, if I may, that's a good point, in the sense that feedback I'm getting is and that's what we saw in the first quarter when the safe haven bid was touted and that kind of thing. But it was true in the sense that money managers that had not been in our sector before were moving in, and there was concern about the market, and it made an impact, and that's one of the reasons that gold traded so differently. So, and of course, with the Dow perpetually going up in the past many weeks, not too far from its all-time highs yet again. I don't know how many times it's done it, 5, 10, 12. That's faded away a bit and calmed things down and allowed the gold cartel forces to not have as big a problem, with their suppressing the prices. But who knows? The odds are pretty good now that the market's run its course again. We hope, at least I hope so, not because I want it to go down, just want reality to be reflected, and the bids can come back in the gold market, and eventually, and we'll talk control there.
How would you weigh in on the whole, process of the wash, rinse, repeat cycle with very high commercial short positions in the cartel, using that to whack markets? And there's been this ongoing debate as far as where we stand now. We've had pretty high short interest, and the cartel looks like there's this epic battle going on. I mean, what's your take as far as where we are in that?
You've stepped in there, and I'm hoping it's in what you're thinking, that this time will be different. I don't put words in your mouth, but people know this commitment traders reports bandied about, and it's the gold cartel, basically. And it's not like no other commodity markets in the world. They're basically the major shorts and do it every time we get these kind of rallies. And the specs, and that's the other side is spec longs in the physical market. And the question is whether they can flush out the spec longs, and like they have done for the past 4 or 5 years, and then roll it over, and then we have to go through the whole process again. And there's no other way it can work. So unless the physical market is strong enough, or the demand comes back in via speculators not getting forced out and coming back in, maybe when the markets dip again, that they're forced to retreat and then blow up in what I call a commercial signal failure. You can't predict it. There's no way. But what I can predict is there's no chance of gold and silver ever doing what I think they're going to do, which is inevitable to happen without that occurring. Zero. And they just have to get blown out of the water. At least this is my strongly held opinion, and we'll see if it's this time. If it's not this time, maybe next time. And I'm hoping we're here now, and I'm hoping that the share action, which has been astounding, especially silver, which is the worst acting market I've ever seen in 40 years, the shares don't act like they're going to stay down too much longer, and they've acted that way all year. I mean, you take a First Majestic that went from 240 to 7. Now it's like 640. It's not that far from its highs, and in the years past, it would have collapsed and did collapse all the time.
And speaks to large monies that are flowing into the sector. Well, definitely a lot of people moving in to get positions that they can keep under the radar. I mean, Ted Butler talks a lot about J.P. Morgan stashing away Silver Eagles, but they could probably be behind a lot of the mining share action too.
Well, that's the exciting part of what's going on here. Again, although silver, with the open interest still remaining at historically high levels, I mean, I don't think I've ever had silver. Does it ever rally 3 days in the past couple of years? I mean, if you ever get a bounce, like it ever spikes or does something, within a day or 2 or 3, it's boom, immediately taken away. It happens every single time, and the number I've come up with mostly is 40 cents. It's happened like 4 times in the past number of months. And, as I've said earlier, I'm an Eric Sprott fan. I'm looking for silver to go well above $100. I think when it starts to move and they lose control of it, which is their Achilles heel, the gold cartel, it's going to be something like we've never seen before. But we're not there yet, and there's no sign of change outside of the shares doing what they're doing.
I mentioned J.P. Morgan and the whole Ted Butler analysis about them taking down as much as 200 million Silver Eagles, and that he also makes the claim that J.P. Morgan is basically serving its personal interest rather than serving the interest of the whole system, because they're seeking to make a profit on the silver, and that's why they're accumulating silver in his thesis. What's your take about this? You wrote a really pretty decent article about this a couple of days back, and then talked about your newsletter, and I'd love to talk about it and get your perspective.
Well, it's interesting because I totally disagree with Ted Butler, but I respect him, and he does, appreciate his efforts and work. But, it's funny, we both came up with the same idea. Mine was total speculation. I talked to my good friend John Emery and others, mentioned my commentary that my hunch was what happened on the way up to 50, almost 5 years ago now, was that it was tremendous. I know this from sources in Europe that the premiums were very high, the tightness was there, it was real. It was J.P. Morgan doing all the buying all the way up. But they were selling to pick a number, 5 times, 6 times as much in the paper market. So they were net mega short. And then they started bombing the market. They've been bombing it ever since. So where Ted disagrees, they're holding, and I think they've sold it all. Not all, but they're getting to the process where they're selling it. And that's people, I'm asked all them, who's selling all the silver down here? Nobody can tell me. Right. John, David Morgan, I mean, I can't find out who's keeping the price down here. So, what Ted thinks that they're loaded up on it and want to make a fortune in the market on the upside. I know they've made it on the downside. What they can make in silver or in gold, it dwarfs what they can make in all their other financial dealings. And J.P. Morgan's the Fed's bank. They're going to do the Fed's bidding. And we know the Fed wants, the gold and silver prices down. I know Ted doesn't even think they have any skin in the game. But I just couldn't disagree more, and all the evidence that God has collected over the years shows the opposite, that this is an operation involves the U.S. government. There's bullion banks like Morgan and other central banks, and probably headed by the BIS in Switzerland. So anyway, we look at it differently, and I know he's very bullish. And of course, in my opinion, from my sources and friends, I mean, when they lose control of the silver market, it will go bonkers. But I just don't see it. I mean, it could happen at any time. It just never does.
Well, we should say, just for the record, that Ted ever wants to come on the show and talk about it, we'll be happy to talk to him.
Good. I'd be an avid listener.
As we were chatting before the show started, the assertion that J.P. Morgan has stacked up 200 million ounces of Silver Eagles, I remarked that there has been a big single buyer of 200 million ounces of Silver Eagles, but I don't think it's J.P. Morgan. I think it's named A-Mark, one of the large wholesalers, A-Mark or Scotia. Yeah,
and to put that into context, Ted Butler had said in his most recent missive, he said, and I quote, my point is that someone has purchased the 200 million Silver Eagles that the Mint has sold over the past years, and in light of persistently weak sales over that time. The most plausible explanation is that someone, I'm screwing up this quote, the most plausible explanation is that someone big has been buying a good chunk of the coins sold. And, he claims it's J.P. Morgan, but, Steve St. Angelo has, I think it was, I'm sorry, I forget who it was, but he did speak to a large dealer, and then our checks as well indicate, Doc, you've had feedback. no one's been seeing J.P. Morgan going with Jamie Dimon in his shopping cart.
Yeah, I've long asserted that if J.P. Morgan is making a physical play, it'd be in the 1,000-ounce bar market, and they'd be sourcing directly from the miners themselves. They wouldn't be going 3 steps down the chain just to remelt into silver bars.
I don't think there's a chance in China that, as I mentioned earlier, that they would go against all their other interests and all the government is doing to make any kind of play to make money in the upside in silver. I mean, I can't even fathom it. I could be dead wrong. Anybody can be wrong, especially me. But man, I just don't see it. I mean, do I think they're going to run out and that silver is going to, when silver blows, it will be something else, as I already mentioned? Absolutely, and I'm hoping it's sooner rather than later. But the price action is going to have to tell us. And so far, every time we look like we can get out of the penalty box, as I like to call it, it goes right back in. It's like a magnet down here. It was at 14 for a while. Now it's at 15. And it's like an anchor attached to it. Boom! It comes right back down. It just sits there. But it can change, and it's probably going to change out of nowhere. And it's when I least expect it, that's probably when it's going to kick in, and boom, it's gone.
Plus, I have a suspicion that our friends at J.P. Morgan have the belief that if they ever have any need for any physical silver, they've got plenty of customers they can just hypothecate it from. Pull over another MF Global.
Well, that's a good point. I mean, there's no rule of law, as we know, in the gold and silver markets when it comes to what the big banks and the big boys, want to do it. I mean, what the heck? It started all the way back when the Hunts cornered the market and they changed the rules on them. They were operating legally.
Right. Why pay for gold and silver up front now and pay interest on our vaults, and we can just let the customers own it and pay the interest rates, and we'll take it over if we need it.
You're taking a card book from Jamie Dimon.
And I mean, I'm only half joking. I suspect might not be too far removed from the truth of how those guys think.
Well, it wasn't all that long ago that Morgan Stanley was actually busted and fined for representing that they had bullion in vaults when they didn't.
Well, that's a good point that people tend to forget. I mean, this is on the record stuff about silver being, sold to customers that wasn't there, and the customers were getting charged for it. I mean, it's unbelievable. And yet, again, though, outside of a fine, no rule of law, nobody got in trouble, no nothing. And many of us think in the gold market's been hypothecated over and over again, and it never does. But I mean, it could blow up at some time if there's a run on the gold on physical gold by owners who want to make sure that they own it.
When we look at the sales of the Perth Mint and the Canadian Mint, even the mint in England, they have sold out of silver periodically, or put things on allocation and so forth. So, I mean, this whole J.P. Morgan being the critical linchpin to answer all of the questions with respect to silver just doesn't make sense.
Let me ask you this. How could silver act so well for a while there, a number of years ago, and then go into absolute comatose spill like it is now? As I said, I'm not being facetious. It's the worst acting market I have ever seen over a period of time now in 40 years.
Yeah, well, I mean, when we're, as you know, it's so much more thinly traded than gold, so it's easier to manipulate. And then when we go through these periods of higher and elevating concern of economic downturn, that whole investment thesis predicated to the downturn for industrial demand is sabotaged, at least temporarily. And then silver lags gold when gold is bouncing back up because people are fearing the default risk inherent with the recession downturn, putting pressure throughout the whole sovereign debt pile that we have now, particularly in Europe. So I think people are very nervous about that, at least initial blast down that could happen with a shadow banking driven implosion that comes out of the financial markets and spills over to the real economy and just gives a walloping to industrial demand. So that has at least some kind of a fundamental underpinning that is easy
but Eric,
to.
I know what you're saying, but I had a bug on that one because that's a perfect example was with the stock market and all the confidence coming back of late. With the stock markets going up, it had absolutely no effect, like one would have thought of, because I agree with you, on what it should have in silver. It got worse.
Yeah, well, I mean, most people...
The ratio went to 83. What, are you kidding me? How could... Because that's what it shouldn't have happened that way, based on what we know about supposed economics and economies.
Yeah. Well, most people aren't really paying attention to the precious metals because they don't care about it. They don't see it as a valid hedge. They think of it as barbarous relics. So, once the Western markets are moving higher, the bozos actually pay attention and chase momentum, and then slowly but surely more people from the managed money universe of 95% or so managed money begin to wake up. But it's an excruciatingly slow process.
Yeah, tell me about it.
But as GATA has always said, the physical is always the linchpin. It's going to be the only means by which the cartel over the long run can keep all of these plates spinning in the air. And you'd have to think that, the physical supplies for the ability to maintain manipulation over the long run is just vastly reduced. We've seen it and can document it when it comes to ETFs. I mean, we don't know what the heck the hypothecation and multiple hypothecations thereafter in leasing that central bankers do with the hordes and central banks and so forth. We have a pretty decent idea. We can't nail it down 100%. But, there's so much less gold available to keep the suppression game going. So,
well, I call it when the bad guys hit the tipping point, when they can't do it anymore. Yeah. And you're exactly correct. And my thinking was that's what we. So I don't get into the whole subject; it's too long. But it started in October, the way they knocked everything down. I mean, silver, for example, 15 days in a row, and we had a fluke in the HUI, and we had the dopey silver fix nightmare. And basically looking at it as part of an end game, that this, what you're talking about, is exactly what's occurring, but it's a process, and it's very slow. And we saw that in the way gold traded in January. And, of course, they regrouped again like they have over and over again, and now we'll see what they got. And if, in fact, the end game scenario is at hand, again, just a process, then this attack now, down again, because of what we're talking about, shouldn't work. I mean, you still got gold at 12.30, and silver's just hardly even a market at the moment. It's at 15. It's what a joke. But again, with the way the shares have traded and what's going on, it indicates that possibly that the process is going to go on to the next level. And for that to happen, you've got to have gold and silver turn around here to the upside and confirm the share action, and all of a sudden we're back on the move again versus going into the dumpster.
So you been getting any phone calls from anybody interesting? I mean, over the years you've been talking to representatives from the Chinese Sovereign Wealth Fund, and you're in contact with a lot of money managers. Maybe not necessarily naming names per se, but are there radar pings hitting the GATA radar that suggests that there may be some interesting things going on in the marketplace right now?
Well, the one thing that just happened the other day, which I mentioned, as you know, and then Chris Powell just put out, one of our veteran cafe members and followers, a guy named Ware Smith, who's I've known for years and is a very, very smart man, and he went to VMI and he asked me, I had to have a question to ask Bill Dudley, who's the head of the New York Fed, who was speaking about, but to ask him, I said, well, ask him about if the United States is, loan gold or swap gold with any other countries and or foreign governments over the past 20 years, and he flat out wouldn't answer the question. And all he had to do was say, no, they haven't. So in my way of thinking, they and of course, this has been a GATA thesis all this time, what they've done, because the United States legally cannot sell any of its gold unless we get an act of Congress. However, they can swap gold with other countries or other institutions and sell their gold to suppress the price, which we believe has been a mechanism of what the gold cartel has done. And he refused to answer the question. And just by the nature, it's very telling. All he had to say was, no, we have not. He wouldn't do that because he'd know he'd be perjuring himself.
Yeah.
So it was kind of a big deal. It's a bit, it's anal in a way, in the sense of a tell, but man, it's there, and when you understand the implications of it all, it's huge. Because that's what we've done, and that's the reason he couldn't say no.
About money managers and people looking to come to understand the market for the first time? Do you get any sense that there's an increase or an uptick in the number of people who are relatively new to the sector, and maybe that being something that's a positive trend? Well,
you don't hear about it in the mainstream media, but there's been nobody big, but in another sense, the understanding now about what God has been saying from the average kind of person, and in terms of not being said by the media, the press, is grown enormously the past year. I mean, like I've never seen in the last 15, 17 years. People get it, and they also understand how our stock market is being propped up by the plunge protection team and so on. These are conversations that pop up all the time in my just talking to people and that know nothing about what I do even. And it's that has been quite a change and extremely noticeable. So we're gaining ground in that regard, and hopefully it's going to help in a big way in terms of when you realize how artificially suppressed the gold and silver prices are. I mean, if gold had kept pace with inflation, it'd be well more than double what it is today. And, good Lord, I mean, silver should be far, far higher. I mean, you guys know the silver market better than I do, but what's the average cost of production? I mean, $22, $23?
It's a little lower now, but because of the energy prices falling down. And
good point, but still, I mean...
it's around, if I remember correctly, it's around 17, 16.
17? Well, that's much lower than I thought. I thought First Majestic was around there. They were the lowest.
No, they've actually gotten, I don't remember off the top of my head, but they're closer to 10 now, believe it or not. They go like $12, I think.
Well, that's a lot lower than I thought. I've heard lower than 17 lately, you're right, but I mean...
First Majestic has been very, very good at cutting expenses and running a tight ship.
Yeah, well, that could be another reason the shares are doing better, but that's a good point. I hope it's not, in a way, because what I'm hoping that the interest in the shares is telling us that big money's seeing what's coming, and it's just a matter of time, and a way to play it outside of buying physical silver and gold is from some of these big money managers to go into, buy up these shares because they know what kind of move's coming.
Yeah, that and it's also a hedge against a cashless society and excess profit taxes and very draconian regulations that can come to gold in particular, but even silver as well too. I mean, I agree, and have heard you many a time say that confiscation is probably not going to come to the United States. Most people in the United States don't even own gold.
That's the whole point. The rest of the world would just laugh at us. I mean, they wouldn't even, I don't think they would do it.
But in terms of protecting the system, government is always very keen to do things that are not necessarily in the best interest of the average citizen when they're protecting the system. So,
well, that's true.
We'll see. But I do think that part of what's going on with the shares is, in fact, a reflection of this. It's something that, in particular, isn't spoken about a lot in the stacker community, because most stackers don't like the concept of holding shares, and there's certainly a lot to be said about how you hold them and whatnot, but we've talked about that before. So, John, what's going on with the silver front? Yes, on Friday we had a big burst of buying, and is that carrying over? Are you seeing slowdown in momentum? What's going on with the SD Bullion sales?
Yeah, it definitely carried over through the weekend. Sales were pretty much crazy Friday, Saturday, Sunday, and they've remained strong into this week. Probably tapered off a slight amount with price jumping up here. I think everybody was pretty excited to see 14 handle silver on Sunday and gold dropping down towards 1,200. So just 30 cents higher can make a little bit of a difference in a temporary.
John, your excitement is certainly not my excitement. That's for sure.
I'm just talking about when silver's been trading at whatever level it is, whether it's $16, $17, and it's been trading there for quite a while. Anytime it drops down to the handle just below it, say if it's been trading at $18 an ounce for a couple of months and drops down to $17.90, buying just goes crazy. So we definitely experienced that on Friday with that 14 handle popping up, and demand is definitely stayed strong this week, but it's a little bit off of the end of last week's levels with the move up. But I mean, that being said, the U.S. Mint's already sold 766,000 Silver Eagles here in the first day and a half of the week. So, I mean, it doesn't look like anything's changed. They're going to sell their monthly or their weekly allocation, right about 1 million coins this week. And we'll be up to about 16 million coins sold by the end of the week through the first 3 months in a week. So the record-setting pace continues. And, again, I really don't see any end in sight for that, at least in the near future, because, I mean, even if we do see a few-week lull in the demand on the retail side, the entire wholesale market, in my opinion, is just going to stockpile as many ounces of silver as they can, because they saw what happened the second half of 2015. They saw premium skyrocket and availability plummet, and I really think that a lot of these big companies, whether it's an A-Mark, precious metals, or what have you, they have a newfound appreciation for the value of stockpiling physical metals, and realizing in their eyes that it might be worth paying a few pennies an ounce a month on interest for an extra few 100,000 ounces, or however many they can afford, to make sure that they have a little bit extra silver available the next time the market gets extremely tight. So, and you don't really have just one dealer thinking along those lines. I mean, you have the wholesalers, you have the retail companies too. I mean, at SD Bullion, we're doing everything we can to increase the amount of ounces of, gold and silver, but particularly silver, that we have in our vault, so that the next time the market gets tight, we've got more coins for our customers, so we don't have to tell people, sorry, we got coins coming in 4 or 5 weeks. If you'd like to get in line, take your ticket, but that's the next time we'll have Silver Eagles, or that's the next time we'll have 100-ounce bars.
Have you actually heard some of your distributors speak to market participants in the supply chain doing this?
Yeah, without naming any names, probably 2 or 3 different from across the wholesale APs to retail competitors. We're hearing the same thing, and it's really to be expected. Anytime after you see the type of shortage we had, whether it be 2008 or the shortage we had the second half of last year, that's the beauty of a free market versus communism or socialism. The market responds. The market sees the value that, wow, I misjudged that. I thought I had enough silver on hand, but I didn't. So I'm going to stockpile as many coins as I can get to make sure that the next time that happens, I have more coins.
They capitalize on those fat premiums.
Right.
We were over $20 on a net basis in the summer for Silver Eagles.
But so what happens, that's the beauty of free markets, is what happens is that that then decreases the likelihood that you'll have that in the near future because everybody's doing the same thing now. So everybody's trying to all the dealers, whether it be retail dealers or wholesale dealers, they're all going to stockpile as many ounces of physical silver as they can to have coins and bars available for their customers the next time the market gets tight. So, I mean, it's a great thing for investors, and it really is the beauty of a free market that's what happens. When you have people looking at markets and responding, they make rational decisions, and their decisions help everyone out.
But most of the authorized purchasers are not doing this on a large-scale shift in the way they manage their own inventory. I mean, they tend to be more conservative. I mean, you guys do things differently at SD Bullion in terms of the way you philosophically deal with your hedging. And
right, but what I'm explaining is I don't think Silver Eagles would still be under allocation if it wasn't for the fact that everyone across the retail and wholesale specter is trying to stockpile coins. My guess is, while retail demand is strong, there hasn't been 15.6 million coins sold at retail so far this year. All the dealers are trying to stock up as many as they can because they realize that, hey, I didn't have enough coins in my vaults last year. I need to double that. I need to triple what I had. I need to... Whatever formula you have for your average weekly inventory turn or monthly inventory turn, everybody is reanalyzing those numbers versus their debt and what more can we take on?
Probably be more. It'd probably be more along the lines of a 10% as opposed to a doubling or tripling of inventory. Maybe even less than 10%, actually. I mean, when some of these large authorized purchasers buy a heck of a lot of Silver Eagles. I mean, we should be careful not to give people in our audience the impression that we're talking about, like, for example, a company like an A-Mark buying double of what they would do, because I mean that would just blow the market to smithereens.
Well, I mean,
they're huge.
Yeah, A-Mark. I mean, without talking too much, I don't think A-Mark is one of the ones doing it. They just have, frankly, they've got too many customers. They're too big. But several of the other guys are, and I mean, frankly, I don't. I'm not privy to their numbers, but I would not be surprised if it's a lot more than 10% from the conversations we've had and we've heard.
Wow. Well, that would definitely be a new development.
Well, I hope that the next time we get together, they won't be talking about 15 and 16 and something in the teens. That we're talking about that the buying is so big, not because it got so cheap, but because people just wanted to have it and doesn't care what the price was, and something that we're looking forward to. But right now, it's the way it is. It's a different conversation. For me, everyone has a different number. My number is 1850. If they can take out that, we're gone.
And the point is, a big picture perspective, like Eric alluded to, the mints aren't increasing. They're not doing anything to increase their production. So the authorized purchasers, whether it's a 10% increase or a triple of their inventory, they can do whatever they want. But if you get 3 to 5% of the general population starting to invest in gold and silver, it's not going to do anything. They're going to be it's going to be a lot worse than we saw in 2015 for inventory.
Yeah.
Sounds good to me.
Yeah, Bill, well, why don't you tell us what's going on with La Metropole Cafe these days?
Well, I mean, it's, past number of years haven't been the best for any of us in the business, and this year has been quite a big change, and it's refreshing to see, and we'll see if that continues. And
you used to speak about the cafe indicator as a sentiment index, where people would come to your website, check it out,
it's just
and then it would go into the dumps.
And that's a good point. I haven't used it in a while, and it's been much. After what we got in January, and of course it's faded since then, and what the stock market traded, it got people's it jolted them in the coming to want to know more about the gold and silver markets and what's going on, because the other markets were falling apart. And of course, everybody looking for a crash or something that was different than it was the past couple of years. Here we are up again. 3, 4, 5% from all-time highs. I mean, and of course now things are starting to fade again, where people aren't as concerned. And same thing with the gold cartel taking gold and silver back down. That's why I hope things change dramatically again, and go back to where we were, because it was vibrant again versus so much tedium. I mean, people just don't want to hear, "Hey, Bill, you're right. The gold cartel, they're killing the gold and silver prices, and they have too much money and too much power. And thank you very much. I'll see you next year."
Yeah, right. Well, many people are of the view that the manipulation will never stop.
So that's what was so refreshing about January, and still as we are right now, because in the shares, whether you are interested in the share market or not, or think it's an indicator or not, it's totally different. As we go into the second quarter than it has been for years. It just has not, for whatever the reason is, it's different, and it's a very positive factor. And because life goes on. You don't want to constantly be kicked in the butt about what's going on all the time and get no reinforcement that what you're doing is correct. It's just no fun. And so I'm hoping that this pause we've had here is going to be short-lived, and we'll be off to the races again and start to erase the 4 to 5 years of very unpleasant business activity. I mean, it's not just people like myself. It's the guys that run conferences. I mean, look what they've done to many of the junior companies are going either bankrupt or barely alive. Exploration companies. It's been a complete fiasco. And I use the word depression, and that's being kind. I mean, it was as bad as anything you could imagine in the industry. And I'm hoping, that's over with. And I know where we're going in terms of gold and silver. I couldn't be more bullish than I've ever been. In terms of doing a business and for people wanting to read about it and deal about it and know what's going on here. I mean, we're all human, and people can only take so much.
Yeah.
However, the people that hang in there do it and aren't running for the hills and getting out. I mean, right now you're talking about one of the best risk-reward trading situations, especially silver, that's ever seen in history. Yeah, and it's frustrating because we don't know when that's going to change. But when it does, you will have a tough time buying it.
Very, very true. Well, I've been reading Metropole Cafe and your newsletter, Midas, for probably, 15 years now. And
I appreciate
it's a great service. Very much appreciate it. Learned an enormous amount with all the different voices that you bring to the table. And our listeners who haven't checked it out, he runs a 2-week free trial, and you can check it out at lemetropolecafe.com. Highly recommend it. It's a great service.
Thanks, Eric, and love to hire you as my head cheerleader.
Yeah, there you go. Well, anytime I'll be happy to grab the pom-poms. You deserve it.
I don't know if I want to.
You've taken a lot of punches over the years, and it's been really tough sledding. And GATA has done more good work in exposing what's going on with our financial system and monetary system than just about anybody else. So,
my colleague Chris Powell is doing that right now. He's in Hong Kong and has been in Asia, going to Singapore, and just was on CNBC Asia with Bernie Lowe, who's just one of a kind as a journalist. What a class!
Yeah, hat tip to Bernie Lowe. Gosh, I mean, if only 1/1000th of the financial journalists in the United States covered news like Bernie did, this world would be a different world.
Absolutely, the guy is he's totally unique. I'd never met anybody like him in 17 years. I mean, he just says it like it is, and he's very smart, and he knows details, and he follows things.
Yeah, Ron and Sana, hang your head in shame.
Yeah, that's for sure.
All right. Well, Bill, we appreciate your time and keep up all the good work at GATA.
Well, thank you for thinking of me and love to do it. And like I said, next time I hope we're talking about the shortage because of the silver shortage because the price is so strong, not because there's a rush to buy it because it's gotten so weak.
We'll take that, Bill. We'll take that for sure.
Okay, sounds good. Thanks again.
All right.
Thanks
for the doc, Eric Dubin, and our friend Bill Murphy of GATA. Thanks for tuning in to this week's SD Weekly Metals and Markets.